India's most favorite traditional asset is currently skyrocketing. Yes, that's right. Gold prices are currently soaring through the roof. And at the time of recording this video, the gold price has hit an all-time high of 73,580 rupees in India per 10 grams. Gold has been a significant asset in Indian households, not for years or decades, but centuries. And if you've been to an Indian wedding, you would understand its cultural importance as well. Now, before we dive deep into this video, please subscribe to our YouTube channel if you're new here so that you do not miss our new videos. So, now that we've established that gold prices here in India, they are skyrocketing, but what is the global scenario? What is the situation abroad? Well, the global gold rates, they are skyrocketing as well, with gold hitting an all-time high of $2,395. And currently, at the time of recording this video, it sits at $2,388 per ounce. For context, 1 ounce is roughly equal to 28.35 grams. But the question here is that why are gold prices rising across the world? And the answer is gold purchases being made by central banks from around the world. Now, central banks from around the world, they've been making gold purchases, and China's central bank, which is also known as People's Bank of China, is the largest purchaser of gold. People's Bank of China has been buying gold consistently every single month since November 2022. And in 2023 alone, China bought about 225 metric tons worth of gold. Now, that brought the country's total to 2,257 tons of gold that it now currently holds. China bought about 25% of the total 1,037 tons of gold that were bought in 2023. But why is China buying gold at record levels? Well, there are a couple of reasons for it. Number one reason is that geopolitical tensions in the world, they are rising due to the two wars, specifically the Russia and Ukraine war. Now, gold has been considered as a hedge against inflation, which means that gold protects your cash against inflation. And as the Russia-Ukraine war began, it led to shortage of food and energy supplies, specifically in Europe. And that is what led to rise in inflation levels. Now this war is still ongoing and the prices around the world, they are still unstable. So any country would park their cash in the form of gold instead of just letting it be, because then it will lose value against inflation. Another reason here is that ever since the Russia-Ukraine war began, the West has put several sanctions on Russia, thereby prohibiting Russia to conduct transactions. And this has led to the West blocking $300 billion worth of Russian assets. Now Moscow cannot use those $300 billion worth of assets till now. And China has certainly taken a note of it. China is well aware of the tactics that the West is using against Russia and is now cautious of the West. And that is also one of the reasons why China is putting their money in gold and diversifying their risk. Now, does that mean that China is significantly reducing its foreign reserves, specifically in US dollars? China's foreign reserves, they are currently sitting at over $3 trillion. So China still has a significant amount in foreign reserves. And while China's foreign reserves, they are sizable, it is still being cautious and diversifying its portfolio. But the People's Bank of China is not the only central bank that is buying gold. There are 5 other central banks from around the world that have been buying significant amounts of gold. And these include the central banks of Turkey, India, Kazakhstan, Jordan, and Czech Republic. Now these 5 central banks, they've bought over 1 ton of gold in just 1 month in January 2024. Now, when we talk about the Reserve Bank of India, which is the Central Bank of India, it bought about 4.7 ton of gold in February 2024 alone. And not just that, it bought about 8.7 ton of gold in January 2024, which is almost double the amount of what it bought in February 2024. Combining the gold purchases in the first 2 months of 2024, this number stood at 13.4 tons of gold. Now, what's even more surprising is the fact that this 13.4 ton of gold that India currently holds in 2024 is roughly about 80% of the total gold purchases that India made in 2023, which stood at 16.2 ton of gold. Now the 13.4 ton of gold that India bought in the first 2 months brought the total of gold holdings of India to over 810 tons. To be precise, 817 tons. Now, is this a clear signal that these central banks, they're reducing their dependence on US dollars? And does this mean that gold is going to replace the US dollar as a global reserve currency? Yes, these countries, they're reducing their dependence on foreign currencies. However, in no way does this mean that gold is going to replace the US dollar. Now, while countries like China, they're trying their level best to replace the US dollar as the global currency, but they're trying to do that with their own national currencies. China is trying to do that with the yuan. China wants to make yuan the global currency of the world. And I've talked more about that in this video here. If you're interested in watching that video, please click the link in the description. These countries like China, they're trying to replace the US dollars with their own national currencies. They're not trying to do that with gold. So gold is not going to replace the US dollars. Every central bank that is buying gold, they're trying to diversify their portfolio. And this gold purchase is going to act as a hedge against the volatility of foreign currencies, especially in times of crisis. Now, gold, it has been considered as a store of value for centuries and a safe haven. And that is why these central banks, they're purchasing gold so that they can protect their money, their funds. Now, another reason here is that central banks, they are expecting the Federal Reserve to cut down their interest rates. And interest rates and gold, they have an inverse relationship. What do I mean by that? Gold in itself, it does not accrue any interest. So gold is an asset that does not provide any interest. And when the interest rate rises, specifically on fixed income assets like bonds, gold as an investment, it becomes less lucrative, it becomes less attractive, and less people want to hold it. That is why more money goes from gold to other income generating assets like bonds. As interest generating assets, they become more lucrative, more attractive. On the other hand, when this interest rate goes down, bonds, they become less lucrative as an investment, and hence investors and countries, they sell off their bond and they put their money from bond to gold, because the rate of return on gold, it increases in that situation. So all of these reasons combined, they're leading to a rise in price of gold. And at the time of recording this video, gold is already up about 14% year to date. So what do you think about the global market as well as geopolitical conditions affecting the price of gold? Do you think that this trend is going to continue, or are we going to see a reversal from here? Please let me know your thoughts in the comments below. If you found this video valuable, please share this video with your friends and family. And please do not forget to subscribe to our YouTube channel. Thank you for watching this video and have a great day.